Hey everybody, good afternoon. Welcome to 12-Minute Trading. This is Doc Severson. I'm joined with Dave Lukas here of 12-Minute Trading. Today's Monday, the 14th of October. Some call it Uptober, and I think we're seeing that today in just about all risk markets that are out there. So just like what we talked about a week ago, we saw consolidation, range contraction, leads to range expansion. We were wondering, okay, which way is this going to go? The obvious path is to the upside right now. And so we have definitely pulled into what we call the market character of quiet and trending. However, we have a little risk event on the horizon coming up here in the next few weeks, as well as some additional Fed meetings and things like that. So it's going to be a sprint into the year end, but we're going to add a little kind of color to that today. So before I throw it over to Dave, I want to let you guys know, for those of you that are live, if you have any questions, any topics that you guys want to talk about today, please bring them up. We'll be here through about the next half hour. Well, with that, Dave, what are you seeing in the market? What's going on?
Well, we talked about it last week, and we saw the daily chart. That watch regularly that are students for us. The daily chart energy was fully charged up, ready to go. We said that we should see this start to release over the next week, and we expected it to go to the upside. That's what we're seeing. The daily chart energy is actually on the S&P and the NASDAQ already over 50% gone. So I think we go through this week and then we get into next week and we may just flag again where we're just going sideways for, a while, not really going anywhere. I think we could see a little bit of volatility in, maybe the 5 to 6 days leading up into the election, and then a little bit after, obviously, of the Fed, like the next day. How crazy is that, right? Like, talk about risk central that week. And so I think we run this week into early next week. Then we get some volatility. I mean, think about it. If you're up the way that a lot of people are this year, even me, I told my students the week before, I'm closing out positions and I'm just going to cash and waiting. Why not take those chips off the table, let the election happen, let the Fed happen, you can jump right back in. I do think ultimately, though, we may get some volatility with that. And I think you mentioned earlier, I think you're right. We probably won't know the results of the election on election night. So that could cause, some jitters for right now. I think right now the market's pricing in a Trump win. The betting markets are. Those are the people that are really putting money on it are pricing that in. But who knows, right? We've seen some crazy things happen with this stuff. So I think, next, 6 to 8 days are good up to trading days, probably on the trend wise. And then, it's time to, see a little volatility and for a week or so into the election. And then afterwards, once the certainty hits, like mid-November, I think we go on that typical tear through the end of the year. And then we've said this before. I think I say this every time we get on here, 2025, all bets are off. So that's what I'm seeing. That's shaping up exactly like that right now.
I think it's important to say that the 2025 issues that we see going forward will happen irrespective of who gets elected in this.
Yeah.
I think we have kicked the can down the road for so long that no mortal is going to be able to step in and save us from this thing, from what's coming. So
I mean, it's just the inevitable. And remember, the economy is a cruise ship; it's not a speedboat. So things take a long time to unfold, especially like when you're injecting this much money into it. I mean, we're really the reason we have any positive GDP is because we've got roughly $2 trillion deficits, and so and that's why the Fed is like had to jack rates, but it's not really doing what normally it does because
right.
they're having to contend with that, right? I think in the back room, the Fed's sitting there going, just stop freaking spending more money than you're taking in, because it's making us, have an impossible job because you're negating everything we're trying to do, right? And so we'll see what happens with whoever's elected. We know, if the incumbent essentially stays in, I think the spending party continues. Trump had big deficits too, a lot because of the pandemic, and obviously the biggest ones. But it wasn't reined in. We had deficits, right? So it's going to take real strong-willed people to come in and say enough is enough. If this is a company, you're spending 40% more than you're taking in. If you went to a restaurant that served you a dinner, and every dinner that they served in their restaurant, they had to shell out 40% more than they took in for that dinner, what would happen to that restaurant? They'd be out of business in like a week, right? So like it's going to take a group that, and maybe Trump and Elon Musk and these guys are going to do it, right? But it's going to take somebody that comes in, but you got to have it's, I always say like we are literally like on a fragile line all the time as a society, from an economic standpoint, because of the debt and stuff that we have. And it's going to take a group of people that comes in and I did a podcast the other day with Jeremy Ryan Slate. You can find it on YouTube, but it was all about inflation and this whole thing. Like, why are people hearing inflation's coming down, but yet they go to the grocery store and they're like, my prices aren't going down. I'm still paying more. There's, people left and right screaming about that, right? Well, because nobody takes into account compound inflation. We're up 26% since 2020, and it ain't going back. That's your new floor. It builds on that now. Right? So it's a shock that we have to contend with and that keeps going. And so if the other side gets in and they actually do start cutting, because inflation comes from government spending, because it creates new money that didn't exist before and throws it into the economy. Too much money chasing too few goods. Tax cuts don't. And here's the reason tax cuts don't, because it doesn't create new money. It takes the existing money and it gives it back to the people that created that money to do what they please with it. So that's your difference. But if we're still spending more than we take in, you're still going to continue this type of environment. So you actually have to spend less. And that's really, really hard to get to, Doc. You were mentioning that earlier. I mean, like, who knows what Congress is going to do? Like, so we have to plan like this type of environment that we're in is going to continue. And the only way to do it is you got to keep your money moving. You got to stay ahead of that devaluation of the dollar. So sorry, not to be too long-winded, but
this reminds me. This is a little bit of an obscure quote, but this reminds me something what you just said. There is a line from Marlon Brando in Apocalypse Now, and I'm not going to be able to remember exactly what it is, but the analogy is, I think he said something like, "I saw a snail crawling on the edge of a razor," and that to me is like, wow, that's pretty risky. It's like if the snail goes too fast, it's just going to cut in half on the edge of that razor. And that's kind of where we are right now. Now,
if you think about it in that respect, think about what has to happen. Let's say that, Trump and them do win, right? As the betting odds say. They come in and they take a hatchet to the government. Let's say they come in and say, you know what? We're going to cut the government in half. Right now, 25 million people are employed by the federal government. So 12 million people hit the unemployment lines, next month. Welfare payments aren't going out at the level that they were before. All these things. You see the issues, right? Because all of a sudden, where everybody, wants this to happen, you still have a lot of other ripple effects from this. So you really have to be smart, and you have to okay, we're going to cut a little bit here. Maybe cut taxes here, cut a little more. Like you have to slowly bring this thing down, but you got to move quickly too. Like in Trump's case, he's only got 4 years, right? So it's a really delicate. If we could get to where we just spend what we take in, would be a huge win, and maybe they'll get there. But you can kind of see the dilemma here.
The one thing that I think Trump is banking on, and you can comment on this, but is that he wants to kind of stick a boot in the door of inflation through energy. So that's going to be his big driver. Is he's going to explore and take advantage of every form of energy or cheap energy that we can possibly. So if he brings down the cost of producing goods, that's going to be something, then it becomes cheaper and they can pass the cost along. You can help drive down inflation, maybe get people to spend again. Because right now what we're seeing is spending is being reined in. Everybody is like pulling back.
Well, that's a key thing too. And it's also if you want to stop Putin and everything else, bring the price of oil down. His
Mm-hmm.
whole economy is built on oil. You get $50 a barrel of oil, it really makes it hard for them to continue to wage a war and stuff, right?
Right.
Iran too, right? So that does solve some problems, but I don't think I think because of the fact that we're 35 trillion in debt, adding a trillion every 90 days or 100 days, it still doesn't. It slows it down. That's what I said. We can slow it down, but it doesn't stop the inevitable the snowball that's rolling down the hill. You have to, I mean, literally have to cut it in half, and that you need Congress to do that because Trump can do some things on oil, but when it comes to all this other stuff, if you don't have Congress, it makes it tough, right? So we didn't expect to get into a conversation about this, but I think it's important for everybody out there to really consider, both sides. Like, what happens? How do you, put yourself in the? No matter what, you're going to make money. No matter what, there's opportunity, right? And because of like where we started, we talked about 2025 kind of having really the ability to have a recession regardless of who's in. That's because everything's compounded up into this point, and it's just getting to the point where it's about to tip over, right? Savings are at all-time lows. Credit card debt's at all-time highs. Car delinquencies are growing faster and faster. SB or FHA and those type of mortgages are starting to have trouble. You see like a lot of the housing stuff that's happened. Florida's getting crushed from like the write downs on housing, not just because of the hurricanes, but just from affordability. 25-30% cuts in the price of housing. Like that stuff you saw in 2008. So there's just a lot of these things. And then you got inflation that's compounded at 26%. You got the Fed keeping rates at 5%, right? Maybe they'll come down a quarter point, right? But that's not really, I mean, come on, guys, that's not really going to make a difference for you. So like there's a lot of that stuff, right? That just been building and building. And so at some point here, it's going to come to crescendo. And usually that's a recession. So that's where things are at. So when you look at the charts, what you see is we've got a market that is ready to get into euphoria because you see these things happen before we get into the bad or the hard times, right? The disgust. And so retail's getting on board. I read today, more American households have more money in the stock market than at any time in history. Why is Warren Buffett selling out and going to cash? Right? So this is why we can ride this wave, but we have to be really careful as we get into the next year because that euphoria is going to peter out. So Doc, you can take them through it on the.
I spent some time this weekend because these things always happen much faster than you expect. They always happen not when you expect either. And what I'm talking about is like reversals and things like that, or like, oh, this is just a pullback, and then it becomes more than that. So I took every long holding that I had and wrote it down on a board with a stop level, and I set a price alert for that stop level, and it's like, I'm not going to be surprised by this thing. So, and because of the fact that I did that, that means that it probably won't happen anytime soon, which is fine. That's fine with me. Now, what I want to show here.
Don't get me wrong. I hope it never happens, right? But we've been through this a number of times. We know the market cycle, and it just, I hope that whoever gets in office really makes the right decisions that put our country in the best footing for the future. But you got to plan for everything, and this is the trajectory right now. So, sorry, go ahead.
Yeah. So, one of the things that I want to talk about here is that when we were back here in about a year ago, we were sitting there going, okay, what the hell's going on? We broke out, but it's not going anywhere. So that was like, back at this time here. So this is almost a year ago. We were sitting here going, okay, is this going to fall down into another bear? So we had all this indecision, and that was right here. That's right there. Now, if you look at this from a chart pattern perspective, that is almost a perfect cup with handle on there. Mm-hmm. So that was actually really cool. And so the measured move target is the depth of that cup up to the neckline. So I take the depth all the way down to the 2022 bear bottom, and then there's the neckline to it. And then what you do is you basically project from there and say, okay, from the breakout, where are we going? and we had just hit our target. So we're up to our target. And so everything from here is gravy. Everything from here is gravy. Now, we'll talk about some things down the road into the end of this year in terms of like what signals can we look at to let us know that things are too frothy. And quite honestly, it doesn't really matter. You can throw just about any study that you want to on this, and it's going to be run over. There's no real way to predict a market top. The only way that you can do this is you can say, just like what we talked about last week, is that reversals start from the inside out. If the daily chart starts to throw off lower highs and lower lows, and then the weekly chart starts doing the same thing, then, duck and cover, because that's what we got to look for. But look at the trend here. The trend looks great. We still have a lot of energy actually on the monthly chart. That still looks good. The weekly chart is burning some fuel here, but we got a ways to go before I would consider this to be in exhaustion.
Exhausted.
And the daily chart is just now, as of today, reaching short-term exhaustion. But I would say lately what we've seen is the daily chart goes way extended. I mean, we saw this back in July. We're like, when the hell is this ever going to stop? It will never stop going down again. And then we ran into a 10% buzzsaw from there. So,
it makes perfect sense for what, just what we're saying here. Like if you look at the daily chart can keep going, and remember the weekly chart, the parent is in charge of the daily. So no matter what the daily wants to do, if the weekly's going, it's going to pull it along with it. You may have a little volatility in there, but it's going to pull it along with it. And the weekly being at 40, you got another at least 2 weeks of charge in that thing.
I think so too.
If it wants to just go straight up, right?
So here's another thing too to keep in mind is that this chart pattern here is an ascending triangle pattern. So the volatility starts throwing off higher lows with equal highs. And then what I've got here is this line here is the measure move target for that triangle pattern. So that's 6,200. So once we start checking off all these patterns and additional highs and things like that. So I would say once we get into the 6,000s, I'm going to be very, very protective of things. Now, what we can do is you can do things, we talked about this last week, you can do like stock substitution. So if you're holding like 100 shares of AMD, what you can do instead is you can sell that AMD holding and then buy for a fraction of that. You can buy just a longer term call option and then ride that, and you can sell that. You can trade that just as if it was 100 shares of stock if you want to, but your downside is capped to what you pay for that. So there's all kinds of things that you can do for these to handle these things. But I think we're still too premature to start talking about, the death of the market. All we're saying is, like, guys, sometime over the next 3 to 6 months, things are going to start to erode, irrespective of who gets elected in the market. It's just that this is a market. This is a mature cyclical bull. This is also a mature secular bull. A secular move is a longer term move, and this one goes all the way back to 2009. So this is a longer term move that eventually will start to run out of gas. And then we typically go into these sort of like 12 to 17 year patterns where it's just a bunch of these cyclical markets. We get into these really short term bears that release, they go back up to the former highs, and then they go down again. That's exactly what we saw between 2002 and 2013.
Yeah, and as we start to, if we continue to add to the debt and that continues to compound, right, and cause more issues, you'll see. I think markets will be a little bit more erratic just because of the nature of the instability that brings to the financial system, right? So you see, I mean, look at China. I mean, like it's not like there isn't problems all over the world. China's injecting like probably in the end trillions just to keep their economy looking okay, honestly, in their markets, right? So where's that coming from? That's inflationary too. Like there's a lot of things that are happening around the world that affect us here too, but also are causing some issues there, right? So
Mhm.
like we're number one, they're number two, so we've got this amongst both of us at the same time. So that's what I'm saying. And there's just I think this. I think anybody knows this. Deep down, is that when you violate the laws of economics, at some point in time, the will revert to the mean, and at some point that'll happen, and it will be a reset, right, or a reckoning in the financial markets because of the financial engineering and stuff that we've basically been doing for a decade plus at this point. So, don't fear it, prepare for it. And, if it never happens in your lifetime, awesome. If it does, well, you're ready for it, right?
So
So,
here's kind of what we're saying is right now, if you look at the charts, the S&P, the Russell, the Dow, the Nasdaq, everything is set up like these are the best looking charts that I've seen in a long time,
mhm.
right? The trend is good. Well, the trend is great right now, and momentum is strong. The energies are good enough for right now to produce additional gains. We just went through a 3 month consolidation from
Yep.
July, August, and September. We broke out in September, and we're on a breakout right now. So everything is good right now in the market, but this is when you should start becoming a little bit more defensive. So stay long. If you're not long, you're wrong. So take
Mhm.
advantage of this to the best degree that you can, especially with asymmetric reward to risk trades. So in other words, spend a little bit to potentially make a lot, because
Yep.
typically at the very, very end of a bull, you're going to see the wildest moves that you're going to just go crazy. Like, why the hell am I not long for this thing? Right.
Mhm.
So it drives people nuts. And this is why they go long at the very top. But you've already got to be positioned for that. You got to be in it to win it longer term. So,
Yep.
so again, charts are great. There's nothing wrong with the market right now. And some of the best gains can be seen in the short term through these things
Yep.
as they go through the final, hyperbolic move here. But
Yeah.
after that, part three to this is where you need to be very, very defensive, and it's going to be really hard. It's going to be really hard because every bone in your body is going to say, "Oh man, this is great. This is the best gains I've ever made in my life. Maybe I should double down on everything."
Yep.
And that's going to be the biggest mistake, right?
When
So
you feel that way, that's the time to get out
that's
and
the
be done.
time to start taking a little bit off the top and then continue taking a little bit off the top. And if nothing else today, the best thing that you can do is you can say, what is my stop for every long position that I have?
Mhm.
What is my get out point? Without exception, non-negotiable get out point. And then if the market continues going higher, then you can raise your stops to different points. But
Mhm.
that is what will separate you, the 5% from the 95% that does not do that and will get dragged down underwater with the next bear that comes along.
And remember, Euphoria, we're not in it yet. Honestly, we're not in it yet. It will defy everything logical and keep going even faster up every day. And that's because it's going to be fueled by retail jumping in, FOMO missing out, right? Fear of missing out. All that's going to spur it. And that's why I really think we may see 7,000 by the year end
Yeah.
if this thing goes nuts enough. So like there's still a lot of run room in this. But remember, while it's going up like that, all the big institutions are selling to them. And what really topples in the end is all the big institutions are out. There's nobody left to sell to. And so then all the retailers that are trying to sell, nobody's buying, right? And so they start going, oh crap, okay, I'll take less, I'll take less. And it's just a snowball and it crumbles down on itself.
Yeah.
And so that's where you just, again, have that sixth sense, you know, be be greedy, but remember, fearful when others are greedy, greedy when others are fearful, right? So don't go too far because you'll get caught up in it.
The other thing too, and I keep hearing this from the right people, and I always have to remind myself of this, but there is no edge in some kind of like a social type of trading institution, right? If you're doing social investing, which is like joining a Discord and like, hey, everybody else is doing this, and you got one person
Right.
like, hey guys, this is what's going on. Let's all buy into this thing. Who's selling into that, right? Social investing does not work. You will be basically what it means is that you're no different than anybody else. You've got to have an independent head on your shoulders, to make a difference. If you want different for returns from everybody else, you got to be different. You got to think differently about that. So I got a question that comes up here about Bitcoin. Let's take a look at Bitcoin.
You might as well just pull up MSTR. That'll answer that question.
Well, not quite.
Um,
MicroStrategies they're going crazy right now. They're actually leading Bitcoin. Um,
and it
so
usually does, by the way.
so here's a chart of Bitcoin, and what I like is Bitcoin actually trades really well, because here's like a little Darvas box that I was watching the other day, which is bounded by 60,000 to the bottom and then 64.5 to the top. And this is my favorite pattern, which is a double bottom undercut.
Right.
So we were sitting here and I said, well, if the price breaks out above here, great. Otherwise, if it breaks down from here, this could be the beginning of something. But I said, watch out for the bulls that are going to hang out down here, because they will squeeze out. So people wait until the last second. They try to go short right at this point, and they have weak hands. And so what happens is they get squeezed out. That's what we're seeing right now. So Android, that's not your question right now. Will it go? These are risk assets. So if rates go down, if the dollar goes down, those kind of things, then risk assets generally will accumulate at the same time as the overall market. That's kind of what we've seen, although there's really a different kind of cycle that Bitcoin runs at versus the equity markets. But in 2022, yeah, these things got hit pretty hard. And in fact, they went early. Let's go back into the weekly chart. So when the equities market was getting hit back at the very beginning of 2022, Bitcoin had already topped out. So it almost trades like small caps if you think about it. And then in October of 2023, when the equities market was just starting to break, there's Bitcoin as well too. Now it's been in a huge bull flag for 6 months. So this is where we have diverged from the equity markets, from Bitcoin and the equity markets, right? We just showed you the equity markets have continued higher. But I think Bitcoin will play catch up here. And especially through, if we have issues with the dollar, if we have issues with banks coming up, then this will continue going higher, because this will be then competition for the dollar for that. So,
well,
yeah,
it's not even just, Doc, it's not even just that. It's the fact that all the institutions now have the ETFs, the funds, and everything around it. And it makes it so much easier to plow money into it. And as the Euphoria stage kicks in, it's going to run with it. And, it's up pretty big today. It's up a pretty decent amount. You should pull up MSTR and show them the chart. We were doing wheel strategies on it a month ago at like 130, 140. Made a lot of money on it, but this thing has just gone bonkers. It's pretty exhausted now. So I don't know if you can pull it up on TOS, but with the energies. But yeah, it's gone nuts.
Yeah.
And this is a great way to play Bitcoin, guys, because all MSTR is, okay, it's because it's exhausted, just pulling back a little bit. But it's gone up, what, 70, 80 points in the span of a couple of weeks. But all MSTR is at this point is Bitcoin. Because all Michael Saylor does is every dime of money that company makes, which isn't, I mean, I think it does 80 to 100 million in revenues. So it's not a huge company. He just plows it back into Bitcoin. So I think they own the most amount of Bitcoin on earth at this point.
that or
So,
governments.
but look at that parabolic run, things had. And the weekly charts just in getting down into exhaustion, but it does this. And it'll crash back down. It'll fall down 40, 50 points. And that's when I like to play. I'll buy shares, sell cover calls at the money on it week to week and everything until I'm taken out. Very rich and everything. Coinbase is doing it too. Look at the breakout on Coinbase today. I told my students over the weekend that we were going to initiate a trade on Coinbase. We did this morning, and are taking advantage of Coinbase as well. And it's breaking out huge. Obviously, Bitcoin's up, but it's breaking out really big today. I think it was up 16, 17 points last I looked. And it's getting ready to run into earnings. Earnings I think, are on the 30th.
Yes.
So I think over the next 2 weeks, Coinbase is going to continue to run up there. And I think you're going to probably get into that mid 200s on it. So there's another one to watch.
You could make, you could sell the $105 options. You can make, 1% on those.
Yeah.
You can make,
sell yourself out of the money.
You can make 2% on the 120s.
Oh yeah. Yeah. And if you look at even at the 25th, that's our trade that we have on that we did today. But, in our fund account that we do, but the, trade on this is, if you know how to do it well, if you're not too greedy, you sell that call at the money and buy your defense right behind it, and you're in pretty good shape. Let it go. But these guys are running. So that's one way to play earnings. Stock going to run up to earnings. Do effectively the abbreviated wheel where you buy the shares instead of selling the put, sell the at the money, call at it, take advantage of that inflated options chains that's going in earnings, buy yourself the defense at the backside just to protect you in case it drops, and then get out, set it so you're out, expire before earnings. It's a nice little way to play earnings on a lot of these high beta stocks that run like that. Last one maybe to show them before we jump today, look at the Russell. The Russell's starting to break out, guys. It has not gone along with a lot of these other indexes until now. So it's just starting to break out from a big squeeze on the charts. See how the daily energy and weekly energy is a lot higher than the S&P at this point. So the Russell's lagging, but I think it's starting to follow suit. So another nice breakout starting here.
Okay. Well, guys, we're running a little late, so
any more questions? Send them real quick. We'll answer them.
Yeah, let us know if there's any questions. Otherwise, it's going to get more and more interesting over the next 2 to 3 weeks, and then we'll see what happens. In mid-November, if my prediction again is that we're still waiting to see. There's a contested state that we have here, and so they're not willing to release numbers yet, and those kind of things. So I think there's going to be some indecision after the election, but eventually at some point somebody's going to have some adult is going to have to come into the room and separate the two parties.
Theory about how one party or the other can cause problems for seating on January 6th. I don't know, another January 6th, right? Not the same, but a January 6th where Congress gets into it now. So who knows where it's going to be? But the market won't like uncertainty. Yeah. Period. If it has certainty, it's going to rip into the end of the year. I think. If not, it's going to volatile and chop around until it does.
The one thing I will say on that is that we went through the same thing in 2000 with the hanging chads and all that stuff. And the market didn't really move all that much from there. So
that's true.
I don't know if this is going to be any different. The big difference, though, is that the market had already started to sell off back around the fall of 2000. The market had already started into the bear market with vigor. So we had already started to move down. We're doing the exact opposite. So we're a little bit more, we're standing on top of the telephone pole. We're a little bit more vulnerable.
We didn't have zero DTE back then and 35 trillion debt either. So
that is true. All right, everybody. Thanks for checking us out. And again, for those of you that are watching this on a replay, which is going to be most of you, let us know if there's anything you want us to cover for next week. Thanks, everybody. You guys have a great day, and we'll talk to you soon. Bye now.